We're in New York in 2019 in a stylish office filled with plants and bathed in natural light. Entrepreneurs and freelancers worldwide are working on projects in a laid-back environment. You're at WeWork, the company that promises to revolutionize the way we work. At its peak, it was valued at $47 billion. Adam Neumann, the charismatic founder, is hailed as a visionary genius before everything collapses in mere months. The valuation plummets, investors flee, and WeWork becomes one of the biggest financial fiascos of the decade. And that doesn't stop the founder from leaving with one of the biggest checks in history after sinking his company. What happened? Hi, entrepreneur mindset. I hope you're doing well. Today, we're diving into the fascinating story of WeWork, a spectacular rise fueled by the charisma of its founder and a brutal fall marked by absurd spending, poor management, and scandal. Let's get started. In 2010, New York is abuzz with excitement. The economy is recovering post-2008 crisis with a new wave of entrepreneurs and freelancers settling in the city. However, finding an affordable, suitable workspace is still a significant challenge, as I mentioned in the Starbucks video. At that time, it became a hub for digital nomads seeking a good Wi-Fi connection to work from. In this context, Adam Neumann, a young Israeli entrepreneur, and Miguel McKelvey, a visionary architect, envisioned transforming offices into modern, flexible, community-oriented spaces. That's how WeWork was born. From the very beginning, WeWork was not just a simple co-working space. Adam Neumann had very big ambitions. For him, it's not just about renting offices, but about creating a global community. In his mind, working at WeWork means embracing a lifestyle, a philosophy. He openly promotes renting a lifestyle, not just real estate, to his investors. And it's successful. The WeWork aesthetic, with its large bay windows, lush plants, and designer furniture, is immediately appealing. The idea is simple: to offer freelancers, startups, and even large companies flexible and inspiring workspaces. Unlimited coffee, self-serve beer, networking events. Every detail is crafted to foster a sense of belonging, quickly attracting investors' attention. In 2017, SoftBank, the Japanese conglomerate led by Masayoshi Son, decides to support WeWork. But be cautious, he goes all in. Seduced by the charisma of Adam Neumann and his ambitious vision, he injects the colossal sum of $4.4 billion into the company. He sees WeWork as a future multinational that will revolutionize the way people work on a global scale. Fueled by a surge in investment, WeWork saw rapid expansion from 2010 to 2019. The company opens offices in over 100 cities worldwide, from London to Shanghai, including Sao Paulo. Adam Neumann becomes a star in the startup world. His visionary, eccentric, and charismatic nature captivates audiences, turning presentations into captivating shows rather than mere business meetings. He assures WeWork goes beyond offices. One day, it will include housing, education, and healthcare. Back to WeWork, in 2019, its valuation reached an astronomical peak, $47 billion. But this meteoric success is already hiding some flaws. The frantic quest for growth comes at a huge cost, and the first cracks are starting to show. WeWork's rapid expansion reveals vulnerabilities in its business model. You should know that in 2017, net losses already amounted to about $933 million. Behind the glass facades and inspiring slogans, one question remains: how can this unprofitable company ever turn a profit? The main problem is Adam Neumann's strategy. WeWork's growth strategy involves renting office spaces long-term at high prices, renovating them, and subletting short-term. This model appears to work as long as offices are full and revenue covers costs. However, it is actually very risky. If demand drops, WeWork is left with long-term leases without tenants to pay for them. This growth pursuit extends beyond office spaces. Adam Neumann, true to his grand vision, starts diversifying WeWork into areas completely outside his expertise. For example, he launches WeLive, shared apartments, and WeGrow, a private school, both based on the same principle as his offices. However, his costly and mismanaged projects fail to persuade, while his conduct raises concerns. His charismatic leadership image conceals a chaotic management style. He makes impulsive decisions, often without consulting his teams, and squanders millions on extravagant projects. His exuberant lifestyle also sparks controversy. Private jet for short trips, lavish parties, and eccentric investments, like in a tequila company, for example, all fuel the criticism. Moreover, conflicts of interest quickly emerge. Adam personally buys buildings that he then rents to WeWork, pocketing millions of dollars in the process. Though legally acceptable, this practice is beginning to irritate investors from an ethical standpoint. In 2019, WeWork chose to go public, a pivotal decision for a company of its size. However, during the preparations, WeWork's finances are scrutinized and cracks begin to show. The losses are staggering, $1.9 billion for 2018. Investors find that Adam Neumann's management practices are far more problematic than previously thought. What was supposed to be a triumph turns into a nightmare. The initial public offering is suspended, and the empire that Neumann built begins to falter. The revelation of the extensive losses and management issues is shocking. The company, valued at $47 billion mere months ago, is a genuine financial sinkhole, drawing heavy criticism. Financial analysts call WeWork a money-burning machine. Its losses are staggering, nearly $2 billion a year, and no clear path to profitability. Adam Neumann's extravagant decisions, which were once seen as bold, are now considered completely irresponsible. The media are starting to report troubling details. And the stories I mentioned to you earlier? Not only private jets for personal vacations, but also lavish parties organized at the company's expense. Reports also mention employees forced to work in toxic conditions, causing investors to lose patience entirely. SoftBank, WeWork's primary investor, views its investment as risky. In October 2019, Chief Executive Officer Adam Neumann is pressured by investors to resign in order to limit the damage. A departure that is shocking but had become inevitable. Adam, who was the soul of WeWork, leaves the company with a severance package, hold on tight, of $1.7 billion. While he is set for life, WeWork finds itself in a critical situation. The company is stuck with expensive long-term leases and has to deal with a collapse in its valuation. Within a few weeks, it plummets from the renowned $47 billion to under $8 billion. And as if that wasn't enough, you can guess, given the year we're in, the virus we can't mention on YouTube hits in 2020. With remote work becoming widespread, the demand for co-working spaces drops sharply. WeWork, already struggling, must close offices, lay off thousands, and negotiate with landlords to reduce obligations. The very survival of the company is at stake. Despite WeWork's spectacular collapse, the company persists. Under new management, it's undergoing a massive restructuring to try to turn things around. Extravagant projects like WeLive and WeGrow are out. Now WeWork is focusing on its core business, co-working spaces. To survive, it's significantly reducing its size by shutting down hundreds of offices in unprofitable markets and cutting 8,000 jobs. The long-term lease contracts, which had been a huge financial burden, are being renegotiated with landlords. These drastic measures will slow the bleeding, but won't reassure investors. In 2021, after a disastrous 2020, WeWork still managed an achievement, returning to the stock market. However, the valuation, at about $9 billion, is barely 20% of its 2019 value. This return is still hailed as a new beginning, but also as a reminder of harsh reality. WeWork must still prove its profitability. Ironically, the pandemic presents an unexpected opportunity for this. As hybrid work models emerge, with employees alternating between office and remote work, WeWork offers a flexible solution. Large companies looking to reduce their own fixed costs will turn to co-working spaces. This gives WeWork some breathing room, showcasing its adaptability to shifting market needs. However, the challenges remain immense. The competition is intense, with cheaper local players in every city. WeWork's reputation, marred by Adam Neumann's excesses, hinders its recovery as investor and client distrust persists. At the same time, the founder, who left the company, remains a controversial figure. He's making headlines again with a new real estate project called Flow. And the most impressive or confusing part, depending on your perspective. Neumann managed to convince Andreessen Horowitz, one of the biggest venture capital funds in Silicon Valley, to invest again, $350 million for the launch, which makes Flow one of the best funded startups right from the start. What is certain is that some consider him a misunderstood visionary, while others see him as the embodiment of Silicon Valley's excesses. What do you think? WeWork's future is uncertain, but the rise of hybrid work may provide opportunities for the company to find its niche. But to achieve this, it will have to navigate a competitive market, regain the trust of investors, and above all, prove that it can keep its promises. Unlike Yahoo, which squandered a $109 billion valuation in just a few years, following mistakes it could have avoided, as discussed in the video that's being shown.